Right. Let's talk about money. Specifically, the kind of money that makes regular money look like pocket lint. The kind of money that comes from hedge funds, those mysterious financial behemoths that sound like something a panicked gardener would invent. When you talk about hedge funds, you have to talk about Israel Englander. He is, to put it simply, a very, very big deal. You might not see his face on magazine covers or hear bombastic interviews, but behind the scenes he constructed one of the most durable and profitable financial empires on the planet. He is the founder and CEO of Millennium Management, a name spoken with reverence and awe in certain circles. Englander matters because he didn't just get rich, he built a machine for getting rich. That machine runs on a principle almost comically simple yet fiendishly hard to execute. Don't lose money. Yes, really. In a world of high-flying gambles and catastrophic flameouts, his career is a masterclass in relentless, systematic risk control. He's the financial equivalent of someone who wins a marathon by never tripping. Israel Englander's journey didn't begin in a sleek Manhattan skyscraper. It started in a Polish immigrant family in Brooklyn. From an early age, he showed a fascination with numbers. He watched the intricate dance of the stock market. It wasn't casual, it was a genuine passion. While other kids traded baseball cards, a young Englander was captivated by the ticker tape. Puts, calls, equities. He earned a degree in finance from NYU. Textbooks began to meet practical money-making. After college, he stepped onto the American Stock Exchange trading floor. Amex. The crucible. Chaotic, loud, brutally competitive. He wasn't an observer. He was in the pit, learning. He specialized in options, complex, needing sharp risk and timing. In the trading pits, he honed instincts, respect for volatility, fear of losing capital. After Amex, he began building his enterprise. He founded IA Englander & Cummer in 1977. In 1989, with $35 million in seed capital, Israel Englander launched Millennium Management. This was the moment his years of observation and learning coalesced into a tangible and ultimately revolutionary business model. He didn't want to create another typical hedge fund where a single-star manager made all the big calls. He had seen that model fail too many times. Instead, he envisioned something radically different. A multi-manager or pod platform. The concept was simple but brilliant. Millennium would not be one big fund. It would be a collection of hundreds of small independent trading teams, or pods, all operating under one roof. Each of these pods functions like a mini hedge fund within the larger firm. A team of traders and analysts is given a specific amount of capital and a clear mandate to pursue their unique investment strategy. It could be anything from trading Japanese equities to betting on global currencies or analyzing energy futures. This structure allowed Millennium to be incredibly diversified. The firm wasn't reliant on a single market view or one particular asset class. Instead, it had hundreds of different, uncorrelated strategies running at the same time. If one team's strategy wasn't working in a given market, another team's strategy might be having its best year ever. The true genius of the model, however, lies in its ruthless approach to risk management. This is Englander's signature. Each pod is subject to incredibly strict, centrally enforced risk controls. They have tight limits on how much money they can lose, known as a drawdown limit. If a team loses a certain percentage of its capital, say 5%, its trading authority can be automatically cut. If losses continue, the team can be shut down entirely. This is not a suggestion. It's an ironclad rule. It's the financial equivalent of having watertight compartments on a ship. The growth of Millennium Management was not a sudden explosion. It was a slow, methodical grind, In the world of finance, where stories of overnight billionaires grab headlines, Englander's path was one of relentless consistency. The multi-manager model he pioneered proved to be incredibly resilient. While other funds experienced wild swings in performance, posting huge gains one year and devastating losses the next, Millennium aimed for something far more modest, but infinitely more sustainable. Steady, positive returns, year after year. This focus on consistency and capital preservation was, and remains, its greatest selling point to institutional investors like pension funds and endowments. The firm's assets under management tell the story. From its initial $35 million in 1989, it grew steadily. By the early 2000s, it was managing several billion dollars. After the 2008 financial crisis, which wiped out many of its competitors, Millennium's risk-averse model looked more attractive than ever. Investors, spooked by the market's volatility, flocked to a fund that prioritized not losing money above all else. Hedge funds typically operate on a 2 and 20 fee structure, meaning they charge a 2% management fee on all assets. While you and I may not be managing a $60 billion hedge fund, the core principles that guided Israel Englander to his success are surprisingly universal. They are less about complex financial engineering and more about disciplined behavior. The first and most important rule is this: prioritize risk control above all else. Before you even think about how much you can make, you must define how much you are willing to lose. This means setting clear stop losses for your investments. If a stock you buy falls by 10%, you sell. No questions, no hoping it will bounce back. This single act of discipline prevents a small, manageable loss from turning into a catastrophic one. Second, diversify your ideas, not just your assets. This is the home gamer version of the Millennium Pod system. Instead of betting your entire savings on one hot stock, spread your money across many different smaller ideas. You might allocate a small portion to tech stocks, another to an index fund, another to bonds, and maybe a tiny, speculative portion to something more volatile. This way, no single failure can sink your entire portfolio. You are building a system where the success of the whole is not dependent on the success of any one part. It's about having many small bets instead of one big one. Third, establish and adhere to a rigid system. Emotion is the enemy of good investing. You can do the same on a smaller scale. Today, in late 2025, Israel Englander's primary business and the centerpiece of his vast fortune remains Millennium Management. He continues to serve as its chief executive officer, maintaining an active role in the firm's strategic direction. The company is a global behemoth: New York, London, Singapore, Dubai. It employs thousands of people, including over 2,800 investment professionals, organized into more than 280 distinct trading teams. The core business remains the hedge fund, which is the engine driving the entire enterprise. Its main function is to manage capital for a sophisticated client base that includes pension funds, sovereign wealth funds, university endowments, other large institutions. The firm continues to invest heavily in its platform, spending hundreds of millions of dollars each year on cutting-edge technology, data science, compliance infrastructure to maintain its competitive advantage in an increasingly complex and fast-moving global market. Beyond the flagship hedge fund, Englander's financial interests are, as one would expect, diverse. Englander is also a significant philanthropist. Ultimately, the story of Israel Englander is not a glamorous tale of daring risks and spectacular, one-off victories. It is something far more instructive. It is a powerful testament to the boring, unsexy, but incredibly effective principles of discipline, systemization, relentless risk control. Preventing large losses is more important than chasing huge gains, and used it to build one of the most successful and enduring financial firms in modern history. The central lesson from his 7-minute masterclass is refreshingly simple. Build a system that protects you from yourself. A good system will always outperform impulsive decision-making in the long run. An enduring lesson from the house that Izzy built.